Hello, everybody. It's Tortoise Investing. On Wednesday, we went over 3 great dividend stonks you can buy and hold forever. Today, we're doing 3 ETFs you can buy and hold forever. If you're new, go ahead and join the 254 that have already done so by hitting that red subscribe button. I'd greatly appreciate it. Super free, super easy to do. Make sure to hit that like button on all those videos and comment down below. It can be anything. You can let me know what you ate for breakfast this morning. I just like to hear from you guys. And it helps out the videos a bunch. It makes the algorithm super happy. So, without further ado, let's go ahead and get into it. If you're here just for the list, we are going to be taking a look at DGRW, Wisdom Tree's US Quality Dividend ETF. This is CHD, Charles Schwab US Dividend ETF. And the Devo Amplify CWP Enhanced Dividend Income ETFs, like a cover call mixed with a normal dividend ETF. So, yeah, if you came for those, thank you for coming in. Make sure to hit those likes and those subscribe buttons on your way out. Now, without further ado, so go ahead and look into what we've got going on here. So the reason I chose these 3 is I got 2 that are really pretty good dividend growing ETFs that pay a slowly increasing dividend over time. And then Devo is a cover call ETF. It pays monthly and it's got a lot higher dividend. So if you are here for a normal monthly a normal dividend ETF that pays monthly, you got your DGRW. You're patient and you want one that pays quarterly, you got your SCHD. You want one that pays a little bit more because you're more of an income investor, you got Devo. Now let's take a look at these here through Portfolio Slab. You can type in what you want here and you can hit comparison and it brings up the 5-year, 10-year chart. And the prices adjust for splits and dividends. So I really do like this one. So if we take a look here, over the last 5 years, DGRW is 75%, VO is 70%, SCHD is 78%, and Devo 70%. So right there in line, everything is within 8% of each other. DGRW and SCHD leading the pack there. Again, Devo, more for your income-looking peoples. So we'll look at the 10-year here. Over the last 10 years, DGRW has outperformed by about 10%, so it's pretty good. Not going to lie, it's outperformed VO over the 10-year period. VO is at 105, SCHD is at 104, and Devo is at 102. Now let's take a look at what these have for us. So the Wisdom Tree US Dividend Quality Dividend Growth Fund. It does have an expense ratio of 0.28%, which isn't too bad. A lot of people would think that would be high, but I don't think 0.28 is too bad. When you start getting into like the 0.7s or the 1s and the even higher, I've seen it up to like 2% on these expense ratios, then it's a little crazy. But 0.28, not too bad. Can't really complain too much about that, especially for a monthly payer. This pays monthly, which is pretty nice. It's got a dividend yield of 2.01%. There's sector breakdown here. Got 18.76% in electric technology, 15.37% in consumer non-durables, 11.98% in technology services, 10.8% in finances, a little over 10% in health technology, 8.2% in retail, 5.45% in producer manufacturing, 3.97% in consumer services, 3.94% in transportation, and 3.09% in health services. So, nice little sector breakdown there. It's got a wide range, not too much and not too little in the things that matter. You don't want something that's just like an 80% technology. Their biggest holding is Microsoft, 8.22%. They've got Apple in here at 5.61%. Johnson & Johnson at 3.6%, Procter & Gamble at 3%, Broadcom at 2.65%, Merck at 2.6%, Coca-Cola at 2.6%, Home Depot at 2.4%, Philip Morris at 2.3%, and PepsiCo at 2.2%. So for top 10 in an ETF, those are some some big hitters. Every one of these are great companies in my eyes. I have nothing negative to say about anything that is listed here in their top 10. I love DGRW. This is the only thing I have in my Roth is DGRW, and I buy like a share a week, share every 2 weeks. Next up, we got SCHD. It's got up expense ratio 0.06, so super low expense ratio there for you wanting something that's a little bit lower. It's got a dividend yield 3.6%. Here recently, they did the reconstruction, so they've moved everything around. Very quickly get off on, say, these sectors. We got 16.8 in health technologies, 15.2 in electronic technology, 14.2 in consumer non-durables, 13.8 in finances, 8.4 in energy, 5.1 in retail, 4.2 in producer manufacturing, 4% in communication, technology servicing is only 3.9%, and transportation is 3.8%. So a lot different breakdown than DGRW. That's pretty different. Their top 10 holdings, again, not too shabby. Can't hate too much on it. I don't like it as much as DGRW. 4.4% PepsiCo, 4.4% AbbVie, 4.3% Coke, 4.3% Merck, 4.1% Chevron, 4.1% Aming, 4% in Home Depot, 4% Verizon, 4% Broadcom, and 3.9% in Pfizer. So the reason I like DGRW over SCHD, personal opinion, I don't like Chevron because I don't think energy is the future when it comes to oil, gas, stuff like that. Verizon, not a fan. Pfizer, not a fan. I didn't like AbbVie when they added it because I had a feeling that AbbVie was going to have a rough half of the year, and they did. AbbVie's down actually 9% from yesterday, I do believe. So I mean, I sold out of this whenever I seen the list, and after I got my last ex-dividend date. I like DGRW a lot more, but that's just me. It's my personal opinion. And lastly, we got Devo. Devo's got a little bit higher expense ratio, 0.55%, but of course you're going to have that when it has something that has covered calls integrated into it. Again, it's the monthly payer, and you get a higher dividend. I think it pays anywhere from 12.5 to 14 cents per share per month. So I mean, it's pretty good. Not going to complain, especially if you're looking for a little bit more dividend income. It's got a dividend yield of 4.6%. Go ahead and take a look at them sectors. So top 10, we got ETF mutual funds or others at 16.3%, finances at 9.5%, consumer non-durables at 8.4%, health technology at 8%, energy at 7.9%, electronic technology at 7.6%, technology services at 5.7%, commercial services 5.1%, health services 5%, and consumer services at 5%. So let's take a look at the top 10 breakdown. So the top 10 holdings, we got short-term investment trusts, government and agency portfolio institutions. So I think that's more like bonds and probably where they got some of their cover call things at. If I was to guess, I can look further into that if you would like me to. Next up, we got Microsoft 5.9%, Procter & Gamble 5.2%, Visa at 5.1%, United Healthcare Group 5%, Chevron 5%, McDonald's 5%, Johnson & Johnson 5%, JP Morgan 4.7%, and Goldman Sachs 4.7%. So again, some really big hitters here. Your too big to fail banks, quote unquote. You got probably the best healthcare stock in my eyes in United Healthcare. Verizon, love Verizon. It's a big holding in my portfolio. Microsoft makes up 15% of my portfolio. I love it. I want more, but I got in at 250 and it's over 300 now. Not going to complain though. It's on a good run. But that is a quick look at the 3 ETFs you can buy and hold forever and just let these things compound away. Well, 2 of them, and then the other one, you can do that as well. Or if you're just looking for some additional income, I threw that in there to kind of cover everyone's bases. But yeah, that's everything I got for you. I hope you enjoyed the video, and as always, make sure to hit that like and subscribe button, and hope everyone has a great weekend. See you.